Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is October 6, 2012, Saturday morning. Lots to talk about, so let's get started. Lots of news and great stuff that came out this week. We had the Obama debate and etc. etc. But I'm not going to get into that because that's definitely opinionated. Okay, that doesn't make any sense. But anyways, these videos are purely for technical analysis, and that's what I plan to do. In any case, this is the chart of the SPY, which is the ETF that tracks the S&P 500. And this is going to be your weekly market update. I haven't updated anything during the week, and the simple reason to that is because I am trying for all of us here to figure out how to better be more accurate with these mathematical calculations. And what do I mean by that? Well, these mathematical calculations have been holding up pretty well. You guys, everyone that has subscribed and been following these videos know that it's nothing's perfect, but for the most part, they hold up pretty well and they can be pretty accurate. However, there are three stipulations to these mathematical calculations, and I wouldn't say they're really stipulations, but three possible things that I've seen happen can happen. And what I mean by that is, well, these mathematical calculations, you notice the different colors. One is for long and one is for short. The pink one, if you hit the pink one, we go short. If we hit the yellow one, we go long, and etc. etc. But if you've been following my videos, you would know that one of three things could happen with any one of these mathematically calculated levels. The first one is we have an intraday pullback as indicated on this candle here. We go all the way up. In fact, this is a 147.05 level. The high of this candle is 147.04. I miss it by 1 cent, which is pretty good, pretty accurate. And within the intraday, we pull back. Okay. The next day, we create this shooting star candle, and then this 147.05 level holds up, including Friday's high of this candle, which was 147.16, which was about 11 cents off before we get an intraday pullback. We get an intraday pullback here, and we get another intraday pullback here. So the question is, which mathematically calculated level will be a intraday pullback or a swing multi-day pullback? What do I mean by that? Well, this day here we had an intraday pullback, and then we created this candle here, and then we just had a nice pullback, a very beautiful pullback here. And this was more of a you could have taken this as a swing trade, okay, had you shorted at the 147.05 level. Now, so this is a multi-day pullback, but that doesn't always happen. A lot of times what we have is an intraday pullback, and then we break through the level and we go higher. We've all seen that before. The fact of the matter is, though, right now with a much greater than maybe about a 95 percentile odds or difference, not odds, more like a, sorry, I'm kind of groggy this morning. Anyways, the 147.05 or any mathematically calculated level has some impact, whether it be an intraday, a gap, or what you call a multi-day pullback or a bounce. Okay, so the second thing or the third thing would be the gap. The gaps are disappointing to me, but the gaps actually help. Let me show you an example. Here we have the chart of SCCO, Southern Copper Corp. This isn't a really good example, but this is a example, I should say. Okay, so we come up, this calculated level of 35.55 was calculated on this day here, and as soon as the stock went, or the ETF went right into the stock right into the 35.55 level, then the very next day we gapped up. Okay, after we gapped up, we just started pulling back, but on the pullback, as you can see, we actually got intraday bounces. Okay, after the intraday bounce on September 19th, we gapped below it. You see how that happens? So a lot of times it's going to be one of three things, or not one of three things. Well, yeah, one of three things. It's either going to be a gap, it's going to be an intraday pullback or bounce, or a multi-day pullback or bounce. So what I'm trying to do is mathematically calculate, in addition to my already complex formula. And when I say complex, it's kind of like I actually literally needed an Excel programmer to help me formulate a program, because the mathematical calculation has, since last year December, been redefined so many different times that I needed something. I mean, basically, it would take me 5 minutes, approximately 5 minutes per stock or ETF, just to make one mathematically calculated line based on the formula that I made. My brother happens to be a very excellent Excel programmer, and he was able to create an Excel spreadsheet for me with all the formula built in, which, by the way, wasn't very hard, so I have him to thank for. I mean, it was very hard, which I have him to thank for, because the reality is I'm actually a network engineer, and I've asked my associates at where I work, and they do have programming background, and they couldn't even figure it out. Thus, I give my hats off to my brother for being able to do that. So now I can come up with these mathematical calculations a lot faster, but they are not as accurate as I'd like to be in a sense of what's going to happen. Is it going to gap? Is it going to be just an intraday pullback, or is it going to be a multi-day pullback? That is what I'm trying to do. That's what I've been trying to work on this whole week for all of us. So we can have a better understanding of what's going to be a good day trade level, what's going to be a good multi-day or swing day trade level, and what levels to stay away from, the gaps. Okay. This again is not a very good example. A lot of times what I see is we actually gap, say we closed on this day, we would gap up right on the level and go higher. That's normally what I see. But this again, nothing's perfect, but this is a pretty good example. I mean, to be honest, let me just reload these drawings here. I mean, when you come back down here and you get an intraday bounce, basically just this upper trend line here, which wasn't even drawn correctly. That's pretty accurate in my opinion, to have a level of 35.55 and then get two intraday bounces and then a gap down from there, and then another level of 34.92. Okay, and then get another intraday bounce here, and then we just cut right through. But after we cut right through, we get resistance at the 34.92 level, and then again resistance. Well, now these are multi-days, and then now we have an intraday resistance, another intraday resistance, another intraday resistance, before we break through again. And now we end up in the 35.55 area once again, before having an intraday pullback. So you guys kind of understand where I'm coming from here, that I just don't know. I know these levels work, and they work pretty well, and they're pretty darn accurate. I just don't know which one of the three it's going to do. Is it going to do an intraday, multi-day, or gap? Alright, so let's get started with the analysis here. So again, I just wanted to make it clear, I do apologize to all of you for not having a video during the week, but it's just because I'm trying to maybe add volume data, or news data, or event data, or whatever I can, to make these mathematically calculated levels a lot more accurate for all of us. And again, this formula that I've created to get these levels, nobody else that I know of in this world, or have I ever seen, has these calculations. There's no indicator or anything. I mean, it's purely 100% something that I created, so you guys don't have to worry. I'm not charging for it, so just stop by, watch these videos, subscribe if you want, and you'll continue to get these. And until I get something a little bit more accurate for you guys, meaning which one of the three it's gonna do, the videos may come a little slower, but I'm pretty sure that I can at least get weekly videos out for you. In any case, let's get started. Alright, so just a quick recap. We had this shooting star level here. We did talk about this rising wedge or rising triangle pattern here. And whenever you have a breakout to the upside of a rising pattern, there's a lot of times I look for a reversal, and we got this reversal signal here with the shooting star, right? But this was about the time where they released QE3, or announced QE3. I think it was on this day, if I'm not mistaken, that we had the breakout, or was it this day? I think it was this day where we had the QE announcement. We created this candle here, and then we just started coming back down. We talked about that short-lived breakout because of a already rising pattern here. Okay. Alright, so we went into this 147.05 level, created the shooting star, came down, went right back into this pattern here. We had this bounce. I did indicate here in the previous videos that this candle here, let me look, Yep, this candle here had the higher volume, and the volume was higher than the past 3 days, just like I've always talked about how important volume is, and that could indicate a reversal. And I'll give you another example in a little bit. But this candle here did not state or did not signify a reversal with, with either a hammer candle or a doji candle or whatever like that. But a lot of times volume is going to be a lot more important than what the candle looks like. However, I like to combine all my indicators together to give the odds in my to put the odds in my favor. I mean, this is a game, if you will, of odds. I mean, a profession. Well, again, I'm kind of groggy. Basically, you want the odds in your favor before you make a trade, because if you want a 50-50 chance, then that's more of a gamble. We're not gamblers, we are traders. Okay, now in any case, we had that volume here. I didn't take the trade here, obviously, but we started creating this. Let me just move this to the side. Let me just zoom in here and then move this to the side a little bit. All right, we started to create this bearish pattern, right? We have this down move, and now we're creating this bearish pattern, this bearish consolidation pattern, all under this 20 moving average. It could not, in fact, it could not break out of this 20 moving average. It was stuck between the 20 moving average and this bottom trend line here. What's going to be more powerful, in my opinion, is this bottom trend line. Why? Because the Feds constantly, continuously, they must have this line drawn on their chart for whatever reason, because boom, 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 continue, continue, continue. They constantly continue to save it. And a lot of traders out there underestimate the power. A lot of technical traders, by the way, underestimate the power of the Feds, underestimate the power of federal manipulation. And a lot of times they refuse to adapt, like a chameleon. If you do not adapt to your surroundings, then a lot of times you'll be taken advantage of, and a lot of traders did. This was a perfect picture perfect bearish consolidation pattern. We even had this candle here which had a tail. Okay, but you know what, again, I didn't see any volume here, and again, we had QE3 announcements, and we have federal manipulation. So what happened on Thursday and Friday? Boom, I believe this was the day of the or the day after of the debate. In any case, okay, so on Friday we get all the way up into this 147.05 level here. Actually, the high of this candle was 147.16. That's a 11-cent difference here, but we open at we gap up and open at 146.91. All right, so that's in between the 147.05 level, and then we just have a nice pullback. We could pull back all the way down to this bottom candle here, and then we have a small bounce back up there. So intraday, this was an awesome trade. Let me just switch to the intraday chart. All right, this is the 10 minute per candle intraday chart of the SPY. Okay, so we gap right into this 147.05. You see these two shooting star candles, or spinning tops, you could also call it that. In any case, they indicate a reversal. We don't see any volume on it, but not a big deal, because this is within the first few hours of the market where you have the most action. In any case, we right into this 147.05. In addition to that, it would be a nice double top from back here. Okay, and then you're gonna have resistance, and sure enough, you pull back all the way to underneath this 20 moving average, and then we bearishly consolidate right under the 20 moving average, similar to the daily chart. But on the intraday chart, the pattern actually plays out, and then we have a continued down move before towards the end we get a small buy-in. Okay, all right, so after all that is said and done, what do I think is going to happen? Or what do I see? What is my plan of attack? What is my next chess move? I'm a chess player myself, and I'm sure all of you guys are as well. You don't want to fall into any trap, the bullish trap right now. I mean, again, we're traders, we're not investors. So if we were investors, yeah, you can buy Apple now, and if it tanks 100 points, not a big deal, because 10 years from now it could be $2,000 per share, right? But we are traders, so we catch the tops, we catch the bottoms, or at least close to it, and then we make money on going long and make money going short. I mean, it's just a matter of seeing the patterns and determining what is what, right? Okay, in any case, You see this candle here? This candle here and this bottom candle here has big significance. Why? Because we come down, we have another, so this is actually a top here, and then we come down into this bottom trend line, so that they are going to have some significance, and then also this candle up here is going to have some significance as well, because people who bought up here are hurting right now. Okay, so if we get up to this level here, we would at least get an intraday pullback for sure, in my opinion. Okay, so what do I expect? What is my plan of attack? And instead of telling you what the charts are telling me and what my opinion is right after that, I'm going to tell you what my plans are, and that maybe would be a little bit more clear. I know I watched my previous videos and I'm like, what did I say? I just contradicted myself, blah, blah, blah. So here's the thing. This candle here, I should say the high of this, let me just zoom in here. Oh, that kind of looks ugly. Let me just move it to the right side here and just kind of zoom in one more time. Make this a little bit longer so it looks a little bit better, and then bring this down here. Please bear with me. Alright, just want to get a better, clearer picture. This top of this candle here, I'm going to just draw a line straight across just like so. Okay, we had that double top intraday, which is why we had an intraday pullback on Thursday. Okay, but in any case, this candle here has some significance. What do I mean by that? If we close above this high, above the high of this candle here on any day before pulling back, then I'd say that the next stop will be here before having an intraday pullback. Actually, we already get there. Would be here. In all honesty, we have a good chance of getting up to this level here if we can close above the high of this candle here and close above that high. What do I mean by that? I believe in confirmation, which means I got this theory from two other traders from two different companies here, and they work out pretty well. I don't base my trades off confirmation, but they work out pretty well as a warning of what's to come. So if I close, say on Monday I close here, the candle closes there, meaning it's above the high of this candle here, no problem. Okay, and then the next day on Tuesday we close above the high of this candle here, or the high of this candle here. Alright, so say, alright, let's just make this a doji candle. Okay, so the close was still above this candle here, which is great. Okay, but now the next day we need to close above the high of this candle here. Okay, it doesn't need to be above the body, it just needs to be above the high. Once we get that, then I'm pretty sure we're going to get here. Now if we get, again, a close above here and then a close above that close, guess what? I do not doubt that we could not get to this 157 level. Again, I've talked about this 157 level in previous videos. I just haven't brought it up recently simply because it's so far away. But I created this mathematically calculated level on this day here, on this candle. And I've also discussed about these trend lines here, these three trend lines that coincide with this 157 level that come all the way down. Let me just zoom out here. Alright, so we have one here, and this is the weekly chart, by the way. We have one here connecting this a pivot top here, that coincides with the 157, pivot bottom, 157, and so on and so forth. Let me zoom out a little bit more. Alright, this is much better. Pivot top here, so on and so forth into the 157 level. So this 157 level, if we can get there, is going to be, in my opinion, a pretty significant level. Okay? Switching back to the daily chart, and that 157 level is based on if we even get there. I'm not saying we're going to get there, I'm just saying if we are, I'm going to take a look at it, and if we go straight into it without consolidating before it or right before it, then I'm taking a short trade, and that's just the bottom line. I'm not taking a short trade for the long haul, I'm taking a short trade for a short haul because we are in an uptrend, and we will continue to be in an uptrend until I see a pattern that changes. What pattern do I see that needs to change to say that this daily chart, at least the pattern, the trend is going to change? Well, if we get a bounce and we close below this candle here, then the trend has changed. What do I mean by that? You just need 2 pivot points. They say you need 3 to create a trend. I say I need 2. Okay, so we have a top here. Let's just say that this is a pivot top. Alright, and then we start pulling back on Monday. I doubt it because Monday is a holiday. It's going to be very, very low volume. It's also Thanksgiving or something for Canada or something like that. I don't know. Traders aren't going to be there, just put it that way. So low volume gives it a upside bias. You know, that's just automatic. It doesn't always happen, but you know, for the most part it does. Anyways, let's just say for argument's sake, however, that this day here is the pivot top, so we can actually already draw a line, which would mean that you know, this doesn't mean the trend is down yet. Okay, after we pull back and we create another low, so we have a low and then we have another low down here, that is a change in trend on the daily already. Okay, that doesn't mean we can't go higher. It just means the trend has changed, and I will trade longer with the trend, shorter against the trend, and longer with the trend. Okay, now that is my plan of attack. Again, a close above this candle here, we're gonna get here. If we close and confirm above this candle here, then there is a possibility we get all the way up here, although in between we're obviously going to get pullbacks and whatnot, but I'm going to have to see where those are, and I'll do that when we get here. Okay, so that's the SPY. I'm already into 20 minutes. I'm sorry, again, I'm very groggy. I can't really think very straight right now, but that's pretty much what I'm thinking about in SPY. I just want to run through quick 3 other things real quick before I let you guys go. I want to talk about the USO real quick because oil is very important of what's going on. All right, so I have this 33.11 level which held up very well. We got a bounce, and again, after the level is used and abused, it's no longer valid. We broke down, but this level still seemed to have held up because the next day we break through it back again. We come back in, and we have an intraday bounce off this 33.11 level. Again, I'm still trying to come up with a mathematically calculated formula to add to this already formulated levels to hopefully help me determine what is going to be a multi-day and what is going to be an intraday. Anyways, oil has a next level here at 31.08 before I see another bounce, so there is a possibility we get down here. If we do get down here, I'll probably take a long trade. However, I don't really see any other supporting evidence of this being a bounce, so I may actually wait for a gap fill just to be on the safe side. All right. All right. This is a chapel. This is a Apple. A chart of Apple. Okay. Holy moly, I can't even speak. Hey, where's all my my calculations here? Hang on, I'd have to recalculate here. I'll be right back. Alright, I'm back with the mathematically calculated levels. I don't know what happens. Sometimes the software doesn't save it very well. Anyways, long story short, we had this 652.85 level on Apple chart. We also discussed the divergence on the ultimate oscillator for the Apple chart, and that seems to be playing out just perfect. We had this doji candle here on higher volume. If you didn't see these volumes today or now, but now we're just bearishly consolidating. Okay, we didn't close below the low of, well, actually we did close below the low of this candle, so it does show a lot of bearishness in my opinion for Apple. Okay, is it going to be short-lived? Yeah, I think it's going to be short-lived. In fact, let me just see here. If I just extend this bottom trend line here, there's a possibility when we hit this 131.96 we get a significant bounce. I don't see that being an impossible thing. If we do, we already closed below, so the close actually is 652.59. My level here is 652.85 on a $600 chart. That's pretty good. In fact, we already hit this with this doji candle here with the low of this doji candle of 650.65, so it's $2 and so forth cents. We had an intraday bounce, which was the close of 661.31, which is about a $11 intraday profit taking. I mean, if you had taken this intraday, 652.85. And again, this is another thing I was just recently talking about. I need to be able to determine if this is going to be an intraday trade or a swing trade possibility. For Apple on this level here, at least it would be a intraday. Now, would I take this trade here? No, because again, once this level is used and abused, I will not trust it anymore, but I would trust it as maybe a resistance line, and that's why I leave it in there. So we close below the 652.85, which means if we get another low, meaning lower than this candle here on say Monday, then I do think that we can get to the 631.96 level. All right, so that's Apple. Now this is the Qs, which Apple has a big influence on, and unlike the SPY, the Qs is still in a bearish consolidation pattern. Okay, and it's still unable to get above and close above this 20 moving average, which basically means there is a possibility that we could still break down on the Qs, and if the Qs come down, then the SPY will shortly follow. We have this 382 Fibonacci retracement level here, also a mathematically calculated level at 66.38. so if we do get into the 66.38 level, if we can get there, then I do see a significant bounce happening off this level here. And again, I'm still trying to figure out if this is going to be an intraday bounce, a day trade bounce, or a gap down lower kind of thing into this maybe 200 moving average. I'm not sure yet, but this level here has some significance, and it's going to be one of those three. So that's pretty much it for my analysis. You just want to watch out here for the Qs, because not all markets right now are in a bullish state like you do see on the SPY. Okay, so just keep that in mind. I'm into 24 minutes. I do apologize for this video being so long. I'm a little bit more awake now. I do apologize again for not making videos during the week, but I just want to make you guys aware that it is for a good reason, and it may take a while for me to come up with an additional formula to add to this formula to determine what's going to be, I guess, major or minor. But you know, once I get there, if I get there, then we'll all have the same data and we can all make some money and trade and be happy campers. In any case, thank you very much for stopping by and watching this video. Subscribe if you think these videos are helping you. If not, then you know, thank you very much for stopping by, and I wish you the best in your trading career and your trading future. For those of you who stay, God bless to you all, and even those of you that leave, you know, God bless to you too as well. Good luck to your trading, and I hope to see you in the next video.